I wonder
Thank you, Carl.
how much of the suppressant on animal spirits you think geopolitics are right now.
I think it's a pretty big suppressant, and I think one of the big reasons why is because geopolitical risk is something that's very, very hard to trade, and something we like to not overplay. So it's something you kind of have to wait out. That's why our cash positions right now are kind of higher than they have been, historically over the last several months. And it's something you can't really read, and you want to keep watching the news flow, and we're definitely monitoring that, but it's definitely playing a big part right now, Carl.
What's a decent cash balance or position right now? And I wonder, it was funny, B of A had their fund manager survey, and they asked where they think where clients think the Fed put is. Their answer is right around 3,700. I wonder if you think that's where the true tolerance for pain lies.
Yeah, I think, that could be around there. I think really, for us, we like to keep clients anywhere between that 1% to 10%, but that'll obviously shift towards the higher range when we want to be a little bit risk averse in certain situations. But, risk off has been a lot of the trade over the past month. We've seen in all different areas of the market, from digital currencies, obviously, to the equity markets. But I do think if you're looking at forward PE multiples, those coming down, you guys mentioned, how Shopify has been trading lower after the most recent earnings. There are some attractive opportunities in many of the growth spaces that have pulled off considerably. And we're looking to add to those positions that we have high conviction on. That's going to be the focus over the next several months as we watch what the Fed is doing, because we know maybe 100 basis points is what's projected into the increase in the Fed's funds rate. So that's something I think we're getting close to the market having priced in. So the next few months will be very, very interesting.
So does that mean that you're wading into growth right now and you see specific buying opportunities? Where are they?
Yes, definitely. I still like, as I mentioned, Shopify. If you look at, the retail numbers that came out, underneath that, the e-merchants was the highest as far as their increase month over month and year over year. So, a 14% increase on that side of things, showing me that underneath everything, e-commerce is still strong. Amazon has pulled back a little bit this year to date, but not as much as the overall market. And that's showing me that there's some areas there in growth. And obviously, investors should be looking in those areas. We like Shopify. We like some of your big, obviously, mega tech cap earnings stocks that we've always been in. And we're still adding to those positions that have pulled back a little bit. And they're at good valuations right now, Morgan.
Delano, I'm wondering how your clients are navigating things right here. Looking at some conflicting signals in terms of what individual investors are doing and feeling. The survey work looks like people are pretty cautious to bearish, but lots of inflows into equity funds. So it seems as if, that habit that people got into, maybe starting in 2020, of just sort of plowing ahead and throwing cash into equities remains. And what's the posture in general among your clients?
I think there's been an interesting, kind of the exuberance, that we've seen before when, younger investors and retail investors that saw over the last couple of years in the market. It's still there, but it's in a different light, right? I think they now understand that the market does have some fluctuations to it, especially when you're looking at, rising rates. This is a period we haven't really done that for a while. And so I think younger investors are starting to see a little bit of how the market works. And I think specifically what I'm seeing, in network and on social media, people are realizing that, but they're not deterred from investing. As you mentioned, the inflows are still there. A lot of the younger investors see this as an opportunity, as they saw, in March 2020, as an opportunity to get invested. And so that exuberance, as far as everything just rising, may have left, but it's now an understanding of, hey, there are opportunities, there's valuations, there's different things, and there's things that I have higher conviction on, and maybe I want to add to those opportunities, Mike.